Hello, this is Right Side Trader. Today is June 26, 2026, and this is my weekly market review, where I'm reviewing the S&P 500 as SPY on a quarterly chart, monthly chart, weekly chart, and a daily chart. This is all for educational purposes only, no trade recommendation, because as we all know, trading is risky. You can lose money at trading, so please check with your financial advisor. Please check with your significant other, and make sure trading is something that is suitable for you. All right, let's jump over to these charts and see what we see. Let me maximize this quarterly chart, resize this. And what we see, we have pressed down below our yearly R1. We're still hanging out below that at this time, but we are still green. So things are not too bad, but we can see there's some bearishness in the market at this time, getting more and more of a wick on this candle at this time. All right, let's go ahead and go down to our monthly chart. Let's see what we see there. On this monthly chart, what we see here, key thing is, first of all, we are still above the 9-10 moving average. We did come up to that R3, sell, and push back pretty good. Got down to a R2 level and came back up a little bit. This is just one of these things. This market has been really, really hot these previous couple of months here, back here in April and May, and all reaching an R3 level. Like I say, you very seldom actually see that, and now this is what happens when you usually get to an R3 level, and that's why I only have the 3 on there. R3 is usually a strong enough area where the market actually sells off, and this is what we usually see. What I'll be looking forward for come next month is that we actually open above pivot, and then we can actually start going higher maybe next month. We have to kind of like wait and see what's going to actually happen though, because it's really getting kind of crazy up here at this time. But let's go ahead and go down to our weekly chart and see what we see there. Boom. On this weekly chart, we see a lot of red. That's what we see here. These last few weeks, nothing but red and all. That's not good. This month, we did start off above pivot, because it opens here, closes down here. This week, we opened above pivot and all, but we ended up getting pushed back down to pivot, even below a support 1 level. Ended up closing this week above support 1, but it doesn't look good. We have probably a few more days left in this month at this time. Let me bring up my calendar. I want to take a quick look at that and see if it's going to show up here. Yeah, it showed up here. Oh, we only have 2 more days left in this month, and then we're going to be starting next month. So that's what we're going to be looking at come maybe the end of next week to see if this market can actually give us a reversal and come back up. Let's see what's going to happen. Because next month, if we do get that, we can end up with us opening back above pivot, try it again, and see if we can go higher and maybe break all-time high. But I'm not seeing it until next month. Now we got 2 more days, in this month, and we're trading, sliding to the downside. Lower highs. We popped up and got a little bit of a higher high, but it was red, and then lower highs, lower low, lower high, a little higher low, but lower low over the last few lows. So this thing is trending down at this time. So based on your trading plan and your trading strategy, do what you got to do to protect your money. That's all I can say. But that's enough of that. That's what we see happening here at this time. Let's go ahead and go down to our daily noise and see what we see there. And we're going to see, this market was crazy today, as we can see based on that long wick tails on this particular candle here for today. I did my trading and I shut my computer down. That's what I did. I'm talking about this candle here, how we went all the way down here and then all the way back up here. That's a big, big, big candle for the S&P 500. And all that's 1737. That's a $20 move in a day. That's a pretty big day. So what does that mean? Does that mean that this market maybe has gotten all in where it wants to get in? A lot of times when you see, something trending down and moving down like this, and comes below an area where you expect to find some demand and some support and ended up closing just a little bit above that, are we getting ready to reverse, or are we getting ready to drop even lower? Did those guys, they work their way out of their long trades and getting ready to go lower, or have they loaded up and ready to let this thing raise higher? That's the big question, and that's what we're going to be looking for come next week. And what I see, though, is looking like we may start next week out below pivot. So that's not good. And if that's the case, we can end up going lower before we go higher. So be careful, be careful, be careful. We have closing the gaps here. We got a little bit of a gap up here. So that's maybe a little bit where we could want to come back up and close that gap and go higher. But on the bigger overall picture, we got to remember and we got to just see what's happening here. We are getting up. I didn't mean to do that. Let me go back out. Go back out. On the little movements, we had our high. We came back up. Couldn't make a higher high. We went down, and we couldn't even get back up to make another reversal. This can be the reversal if you want to say, it couldn't close this gap and that's what's got me a little concerned that this thing could continue to the downside. So be careful. Again, that's why I say just be careful, be careful, be careful. But it did hit a demand level down here in this area, and probably based on what's back over here and bounce pretty good today. So just be mindful of your trading plan and your trading strategies and trade accordingly. And that's all I got to have. That's all I have to say at this time. This is Right Side Trader. Hope you guys had a great day. Hope you guys have a great weekend. And I'll talk to you next week. Have a good one. Bye.